Hello and welcome to Global Business, CCTV's new program with insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, from Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to entrepreneurs making the headlines. I'm G2 Abraham here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. Kenya's Equity Bank ventures into the telecommunications space. And we await African leaders at the Washington summit next week. And winding down in Ethiopia, we feature a beer ban that's cashing in. Welcome. Let's start today with Barclays Africa Group, which posted a 10% rise in first half earnings, boosted by its newly integrated Africa operations. Now, last year's first half earnings, which did not include profit from its wider Africa infrastructure, grew by only about 8%. Under a deal concluded last year, Barclays PLC handed over ownership of 8 African businesses to its South African subsidiary. This is in exchange for 62.3% stake in a new combined entity that was renamed Barclays Africa Group. Operations such as Nigeria, Mauritius, Kenya, and Uganda were brought under one umbrella, but Egypt and Zimbabwe were left out of the deal. Headline earnings from the rest of Africa grew by 34%. This is faster than 6% growth experienced in the bank's biggest market of South Africa. Kenya's Equity Bank plans to roll out SIM cards to its customers next month, pending regulatory approval. Now, the move will mark a first for banking institutions in the region and will enable the bank to offer mobile banking services on its own platform at an affordable rate.
Mobile banking has been the battlefront for banks in Kenya, riding on the success of mobile money transfer platforms. Besides its convenience to customers and 24-hour availability, the system offers a cost-effective medium to reach their customers. But this medium means that the institutions share revenues with telecommunication companies, a situation that Equity Bank maintains makes the service expensive and goes against its business model.
We believe in affordability of financial services. If you look at Equity Bank, for the last 3 years, we have consistently been voted as the bank with the most affordable charges.
The bank was recently involved in a tussle with Kenya's largest mobile service provider, Safaricom, which also boasts of the country's most popular money transfer service, M-Pesa. Equity proposed to introduce a slim SIM to be attached to the existing mobile phone SIM cards, but Safaricom resisted the plan on grounds that it would compromise security.
That SIM card will be treated like a credit card or a debit card, and ours is going to be certified by American Express, Amex, that it has the same security features like a credit card. And data will be moving in a secure form.
In its half-year results, Equity Bank reported that agency banking, a model it recently adopted, contributed to more than half of its deposits, signaling a move from traditional banking halls to more convenient system by customers. The bank hopes to replicate this success in its operations in Tanzania, Uganda, Rwanda, and South Sudan. The bank reported $123.4 million in untaxed profit, a 21% growth compared to the same period last year. Noel Makugu, CCTV.
Shifting gears now to oil and gas producer Tullow Oil, which has reported a net loss of $95 million for the first half of the year, writing off huge exploration costs. Now, the explorer, which made a net profit of about $315 million a year earlier, said its revenues fell by 6% to around $1.3 billion. Tullow has reported write-offs of some $402 million on drilling in Mauritania, Ethiopia, and Norway over the past 6 months. It has also had various licenses canceled. Now, the energy company is now counting on drilling projects planned in Kenya and Ethiopia this year and in 2005 to improve performance. Tullow said production fell by 12% in the first half to some 78,400 barrels of oil equivalent per day, short of its full-year production guidance of around 85,000 barrels per day. For more analysis on this, we're now joined by Miriam Bamard, who's live for us in London. Miriam, are investors worried about Tullow's operational costs?
Well, G2 Tullow had already warned investors of a potential sharp rise in those write-offs because of exploration costs, but the company had already dented investor confidence even back in June because of weaker production in places like Ethiopia and Norway, of course, costing about 95 million in write-offs, as you were saying. It also hasn't helped that global M&A activity for the energy sector has been slowing down, and the company is now shifting its focus to drilling in lower cost areas onshore in Kenya rather than the offshore deep drilling ventures that we've seen in the last couple of years. But it also worries investors that Tullow is ramping up production in places like Ghana and Uganda, putting it in what's deemed as no man's land between production-focused and exploration-focused E&Ps.
Now, do experts on your end think that Tullow should reduce its exploration cost, or will it end up paying off in the long-term profits?
Well, you know, one major concern for investors is, that dry holes can quickly chip away the value of the exploration and send Tullow's stock skidding. So certainly where Tullow ends up is a major problem. In the last 5 years, Tullow had on average a drilling success rate of more than about 70%, well above what we've seen for industry standards. But last year, though, that success rate dropped to about 20%, and investors had to come to terms with the disappointments in Guyana, Mozambique, and other places, while recognizing that Tullow is in a tricky spot between independent and major explorer and producer. Many believe that Tullow shares are undervalued at this level and actually can benefit from further drilling activities in West Africa, East Africa, and of course offshore Norway.
All right, thank you for that analysis, Miriam Bamard, live for us in London. Moving to South Africa, where the country's company Lonmin has agreed to make a royalty payment in cash and shares to the Babo community as required by Black Economic Empowerment Program. The community will receive a total of $53.2 million worth of shares and deferred royalty payments for 5 years following the completion of the deal. Lonmin is also setting up a Babo trust to which it will transfer some of its shares in its subsidiaries. It is carrying out an employee ownership plan and a community share ownership trust that will boost the BEE ownership further. The transactions will allow Lonmin to boost the Black Economic Empowerment Program equity ownership from 18% to 26%, which is the target set by the South African government. Let's take a look now at the African markets that we focus on to see how they close this Wednesday. Looking specifically at the Kenyan markets, which opened again today after the Eid holiday yesterday. The Nairobi Securities Exchange closed the day today 0.56% higher at 4,891.03 points. The Nigerian All-Share Index closed the day with marginal increase of 0.2%, posting at 42,369.02 points. Now, according to traders, yields on Nigerian debt are expected to fall this week, while those in Kenya are expected to remain steady. And when we come back, we examine what awaits African leaders at the Washington summit next week.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
Zambia is a hidden gem, soon to make its shining debut on the global tourist circuit. It successfully hosted the UN World Tourism General Assembly in 2013 and is expecting the exposure to shoot their previously slow-growing tourist earning numbers far beyond the 2010 mark of $148 million. Welcome back. You're watching Global Business. Now, let's start back with U.S. President Barack Obama, who has challenged African leaders to look inward for solutions to problems on the continent's economic problems. Now, instead of making excuses based on history of dependence and colonization, President Obama made the remarks on Monday while addressing the Young African Leaders Initiative, which brought together 500 promising young leaders from the continent. In tonight's What's Hot segment, we focus on the upcoming U.S.-Africa Leadership Summit, in which President Obama will host African leaders in the U.S. capital of Washington, D.C.
Next week's meeting will attract 50 African leaders to Washington. Almost all African leaders, excluding Zimbabwe's Robert Mugabe, Sudan's Omar al-Bashir, and Eritrea's Isaias Afwerki.
It's a matter of United States attempting to reframe how they engage Africa in light of the fact that they have a new competitor, of course in the name of China, who has really been very visible.
The International Monetary Fund forecasts that the economies of sub-Saharan Africa will grow at an average of 5.4% this year and 5.8% the next, faster than the global average. Many countries are growing from a low base, however, and others face population growth greater than the economic progress. The United States, still the world's largest economy, is only Africa's third largest trade partner after the European Union and China.
When we talk about a continent, rich in mineral resources, rich in arable land, rich in population, we talk about over 1 billion people. The continent and the country has to have interests that surpass the daily needs of the people.
President Obama announced the summit in June last year during his first major tour of African countries, South Africa, Senegal, and Tunisia. Aside from the 2013 tour, Obama has made only 2 trips to sub-Saharan Africa during his presidency, one brief stopover in Ghana in July 2009 and a visit to South Africa for Nelson Mandela's funeral. Susan Mongeli, CCTV.
Joining us now with more on what we can expect at next week's U.S.-Africa Leadership Summit is Daniel Renches, who's live for us from Washington, D.C. Daniel, China has surpassed the U.S. as Africa's biggest trading partner, having spent years building their commercial relationships across the continent. Now, what could the U.S. summit do to narrow this gap between America's economic ties with African countries and those of China?
Well, there's no doubt that there's been stellar growth, hasn't there, been in China-Africa engagement, and the level of growth has been astonishing. And, you know, the trade levels also on China are much higher than the United States now. But I think the gap, the economic gap, can be overstated. For example, if you look at foreign direct investment, the US and France are actually leading that particular chart with about 31 billion US dollars in 2012, whereas China was at around $2.5 billion. I mean, these figures can change over time, and clearly China's growth has been extraordinary. But let's not forget that if you take that 31 billion US dollars, that's about 1% of US FDI overall. So there's huge potential still for the United States. We're still very much at the early stages, I think. The key question, I think, in terms of competition now is actually with Europe and the United States. Europe's signing all these deals with African countries to have preferential access, while the US is still negotiating this AGOA, which is essentially to provide preferential access to Africa without any reciprocation for US companies into Africa. So I think on this agenda during this summit will be a desire of America to say to African countries, we now need some kind of level of reciprocity in order to bring US goods into Africa, as well as giving you the preferences of AGOA, which are still to be completed.
Now, how will this U.S.-Africa summit compare to similar forums organized by China, the European Union, and Japan?
Well, I think in some ways the US is emulating the European and the Chinese and perhaps the Japanese as well, in the sense that there's never been a summit like this. This is the first of its kind, so it's very ambitious. And I think it also underscores the fact that President Obama really hasn't done all that much in terms of his personal engagement with the African continent, 2 very short trips. That being said, there's also a potential problem for the Obama administration in being so ambitious. There aren't going to be any one-on-one leadership, bilateral negotiations or talks with President Obama. The administration acknowledges that, but says that President Obama will be deeply engaged. But it's certainly not easy to organize a summit where 50 African leaders are descending what is, after all, quite a small city. It's going to have huge disruptive effects. And also, the management of all those different countries is going to be difficult for the administration.
All right, using China now as an example, when they organize summits, it's red carpet, big money, investments and loans with many bilateral conversations, and they invite everyone, and there's no talk of human rights or democracy. It's a very different approach than the one the U.S. is using. What's Washington focusing on to make their summit stand out here?
Well, to some extent, actually, the administration has been criticized by non-government organizations for not emphasizing human rights enough in the Africa relationship. Certainly in President Obama's 2 trips to Africa, there was a real emphasis on trade, and I expect that will continue. I think the Obama administration has taken on board some of the criticisms that human rights, gay rights, women's rights, environment, all of these non-governmental organizations, civic society organizations have been somewhat excluded, and tried to bring them into the agenda. So we'll see more of that being emphasized. I think, though, key is the issue of whether the Obama administration can thread the needle and demonstrate the argument that if you have groups that are excluded in these societies, if you have marginalization, that is not just a moral issue imposed from the US on African countries, but it's also an issue that involves development, the economy, and also security. So I think if the Obama administration has an opportunity here, it is to show the linkages between all of these different facets.
All right, thank you for that analysis by Daniel Renches, live from Washington, D.C. Now, moving to Benin. In order to implement the Istanbul Program of Action, Benin has been organizing a ministerial conference on new partnerships for capacity building in least developed countries. The 4-day conference will identify new and innovative partnerships to support efforts of least developed countries with the goal of strengthening their productivity capacity. It will focus on key issues like gender, female empowerment, employment, and sustainable development. The meeting is being attended by the ministers and experts from least developed countries, the United Nations, private sector, civil society, and international philanthropies. The program was adopted in 2011 in Istanbul, Turkey, for the sole purpose of developing productive capacities for least developed countries.
Over the last decades, life expectancy in Africa is up from 40 to 60 years. We have halved infant mortality and maternal mortality. Absolute poverty is on the decline. There are more children in school, including girls, than at any time in our history.
So what we are trying to do with this conference is that how we can bring about change in agriculture, how we can promote industries, how we can promote economic activities, employment generating economic activities. And that's why this conference is focusing on building infrastructure. If you have economic activity, you have to have roads, you have to have the electricity, you have to have the the irrigation system if you want to develop agriculture. So we are talking about policies which are important for bringing that out, but also support from everyone around the world.
Looking now at commodity prices for the day. Let's look specifically at Brent crude, where inventories are being reported as having fallen by 3.7 million barrels last week. Analysts have expected the decrease, but they put the estimate of decrease at around 1.5 million barrels. Now, given this, U.S. crude imports rose last week by 315,000 barrels per day. The price of crude is hovering in a tight range, nearly $107.50 a barrel. This is as investors are keeping an eye on U.S. data and policy decisions from the Federal Reserve that will provide more price direction. And still to come, we look at one path one homegrown beer brand in Ethiopia took to become a household name.
BizAsia. Asia means business.
Welcome back. You're watching Global Business. Now, beer is a popular beverage around the world, and Africa is not the exception. For this particular reason, Dashin Brewery has set up shop in Ethiopia in order to tap into the growing demand of this commodity. In tonight's Grassroots segment, we learn how Dashin has grown its brand into a household name in Ethiopia.
Brewers in Africa are profiting off of this companionship. In early 2012, an Ethiopian company, Dashin Breweries, saw opportunities to expand due to growing demand of beer. They agreed to take on international investors, Duet Group and Vasari. Although details of the contracts are not all public, it is understood that the investment consortium has paid up to $60 million for 60% stake in the company. 1 year on, the benefits of the investment are visible in the company's operations.
There is many difference after Duet Group joins us. For example, the first one is occupational and safety management systems are 100% implemented. For example, my all safety equipments are ordered by me. After Duet Groups joined us, a lot of production maximization takes place.
Dashin is now the most modern brewery in the country and has a yearly potential production capacity of 769,000 hectolitres.
This year we've seen, in fact last month we had record production and record sales, the highest ever in the history of the company. And that's at the existing site in Gonda, which we also plan to invest in and grow to satisfy the market in the Amara region. Secondly, as you mentioned, the work has already started at Debre Bahan. We've started the civil works. And that's going very well.
Ethiopia's beer industry has grown rapidly over the years and now produces a total of 305 million litres annually. Consumption is predicted to increase by up to 15% year on year in the near future. This is attributed to rising incomes, increased urbanization and rapid population growth.
The per capita consumption of beer in Ethiopia was around 4.5 litres versus around 12 litres just across the border in Kenya and almost 59 litres in South Africa. So for companies like Diageo, companies like Heineken, which also did an acquisition last year in late 2011, these were the kinds of figures that they were looking for.
After Dashin Brewery became operational here, it created a lot of job opportunities for youth. It also established the Dashin Football Club, which helps the youth participate in sports. They also help Gondar and Ethiopia economically.
All the production crews or the technical crews are incentivized. By this hectoliter, this amount of men are incentivized. After that, even our productivity is increased more than 60%.
Dashen Beverages is not only involved in beer production.
Dashen in its own way has invested in its own team and got Dashen into the Premier League, but the bigger international companies also sponsor national teams and generally do sponsor African football. So I think we can also expect to see more investment and sponsorship going into the sports side of the economy as well.
Ethiopia is one of the fastest growing economies on the continent. With consistent economic growth, companies like Dashen are poised to grow even further. Wazir Khamsin, CCTV.
British officials say that driverless cars will be tested on roads in as many as 3 cities in a trial program that's set to begin in January. Now, the test will last up to 3 years, and sensors and cameras will guide the cars. The plan will include 2 types of driverless technology. One places the driver in the car who can take controls if need be. The other one calls for further self-driven vehicles with no driver present. Now, government officials say driverless cars could transform Britain's road network and improve safety and traffic flow while reducing carbon emissions. Other countries, including Japan and the United States, are already developing driverless car technology.
The technology of these vehicles is already there. I mean, you already have vehicles that can do automatic braking, automatic acceleration, automatic parking. The big breakthrough will be linking this up with satellite technology so that whole fleets of vehicles can be managed in a more efficient way. It saves time, saves fuel, and it's getting that technology right that will be the big change. And in parallel with it, we've got to develop thinking about regulation, because, of course, public safety has got to come first.
Consumers are going to want to know about, what does their insurance cover? Is it going to affect premiums? And that's going to come down to clarifying exactly where responsibility sits.
I once travelled in the back seat of a car, watching the steering wheel move and actually watching the gear stick go up and down as the engineers in front of me were in a conventional truck throwing pieces of cement off the truck and watching the car steer around those obstacles that were deliberately put into the road. It's a totally surreal experience.
Let's take a quick look now at how your money is trading, specifically looking at Ghana's cedi, which is trading $3.44 to the dollar. The country has ended its ban on commercial banks importing dollars. It initially implemented the ban in hopes of propping up its ailing currency. Ghana plans to move forward with a €1.5 billion Eurobond next month if market conditions continue to be favorable. And coming up on Global Business tomorrow, a cooperative in Ethiopia is helping small-scale shoemakers improve their business by providing them support to market their products and improve their skills and training. And the Zimbabwe unit of the world's second-largest platinum producer, Implats, will spend close to $700 million to upgrade its base metals refinery. That's it for this edition of Global Business. Remember, you can send us your feedback to globalbusiness@africa@cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm G2 Abraham. Thanks for watching.